Alright, I'd like to invite you to today's version of Sell at the Highs, Buy at the Lows. Or as my mentor would say, buy at the highs, sell at the lows. So what we want to do here is we want to do an analysis of a day. So we'd like to just get one version of a day in the Nasdaq, which I believe is the pinnacle of trading. I've traded quite a few things. I've traded currencies, I've traded Nvidia, Netflix, Spider. Spider used to be my favorite, and Nasdaq has taken over, and I think it's taken over for a good reason. So let's take a look at the Nasdaq. I prefer New York session. I generally wake up in the morning, so we are going to pretend that we are trading, let's say, a 7 a.m., a New York session, roughly, time frame. I typically wake up, 7, and then I'll shut it down by 4 o'clock. So if you were to walk into any type of scenario where you're day trading, you're going to want to look at the daily time frame first. That's the first thing you want to pull up, is what happens in a day. And we don't need to go back too far, but what I like to find is a lot of times when you get these elephant bars, eventually you'll get a retracement or a rebuild from an elephant bar. So for instance, we have this bar here. It eventually covers the whole bar. We have this incredible downtrend. Well, guess what? It covers the downtrend, and so forth. So keeping that in mind, every time you have a major move like this right here on the daily, so we have a high and a low, you have a very good chance of covering that move, which does happen. So we love these elephant bars. So if I was to do a daily, I would look for a high and a low of a previous time period, and then I would also look for the previous day. So we're trading the last trading day, which was the 9th. So we're trading the 9th, and what I once again like to look for is, let's go back a couple days, see if there's any patterns or any major action that's taken place. And here we can see we had a tremendous amount of buying, and we're on our way to a tremendous amount of selling. Our next time frame that you would look at would be a 4-hour time frame. And the reason we look at the 4 hours is it breaks it into segments, different pieces. So it would break this into 2 bars, and so forth. And then we get a little more detailed information on what happens and what goes forth. I like to draw out lines, and we'll get into all these lines. But if we have a tremendous amount of buying here, normally when we hit the bottom of this range, we're going to look to buy. When we hit the top of this range here, so if we had no other data and we're going off of this tremendous bar, I would look to sell here. And if we look into the past, over here we have a downtrend. So we can see a pattern, and I really dislike these people that don't use data and it doesn't mean anything. It means everything. So we have a downtrend, we have a base, we have another base, So right here and here, there's your support. So 1. Once you figured out where your support is, it doesn't always mean it's going to hold, but if we were to look at patterns on a 4-hour, we can see that every time it hit this area of support, we got a nice jump up. Now here it broke it down some more, but once it breaks that, we're up for a tremendous line. So this line's important. We also need to respect this area in here, because that was the low. And when we hit the low, we tend to go long. So on the 4-hour, we want to know this baseline. Obviously, we want to know the tops. We also want to know where the major bars are. So let's go to the hourly. Now let's look at the hourly here. And this is funny because we're only trading this day. So we're trading the 9th, but the reason why this is important is I want to show you why there's balance and why there's a certain ebb and flow that happens within past time frames and how we're going to utilize that in the future. So for instance, we know we have a tremendous amount of buying, tremendous amount of selling. We've reached a bottom, our true bottom here in this blue area is a definite buy. Our true top here in this area is a definite sell. One thing you'll also notice is right here at 8 a.m. we had a sell-off, a wick down. So if you were awake here and you saw a pump down, and then we saw a settling, and then we saw another move down, once it hits the meat of that candle, it's almost a guaranteed uptrend, and it goes all the way to the smile and base is here. That would be my out. You have a stall here, a base here. If you wanted to ride it up to the upper level, very close but a little shy arrow. But once we hit in this range, right, this is our sell range. So when we get close to this, we're looking to short. And if we follow that pattern, we get a nice short. Now here's a little tricky because we have a wick and we have another wick, and it also lines up with the separation of the two bars. So once we play this bar, it looks like a long. Play it again, we can catch a nice little long here, but like all things, if we have a tremendous move up, eventually we're looking for a retrace of that, and it has not retraced that yet, and eventually it does retrace and goes even further. So much like we've had the upward smile here, right? So we had this power move here and this nice little smile. We have a down move and another down move. If we count the measured move from here to here, right? If we simplify it, we can do points. We have a nice little grid here. We could do grids too. It's basically 1, 2, 3, 4, 5, 6. It's 6 panels, or it's from 1204.755 to 11.75150. But if we go 6 bricks down, 1, 2, 3, 4, 5, 6. What do we get? We get a green baseline. Right? 1, 2, 3, 4, 5, 6. 1, 2, 3, 4, 5, 6. There's our base. This is a measured move. Why is this base important? Well, it's important because if we have no data whatsoever, and all we have is this tremendous amount of buying, and we're looking for closure, we see a fill of a smile, we see it double. This right here is close to a double bottom. We see a slight move up. We're still looking for the completion of this, and we get it in that measured move all the way down. So if we're looking for here, with this major move, we're actually looking down here. And if we had no other data to go off of but the major move, right? Look how beautiful that lines up. Pretty crazy. And as we continue to play off that break, look at that break. Look where it lines up here. So before we even hit our trading day, which was going to be on 12/9 at 7 a.m., we have a couple of analysis, a little bit of data analysis, which tells us that we've established a bottom, we've established a top, we've established a kind of a mid-range, and a lot of times what used to be support, right, when it breaks all the way down and comes back up, a lot of times becomes resistance, and then eventually will probably become, you know, an up move or a down move, depending on how the market trends. So now we're ready to look at our opener at 7 a.m. So let's pull this up a bit. And let's go down to 30-minute time frame. And we can continue to look at similar data. Upward move, completes a smile, bases, goes up, drops down to the first level, which is really right around here, but because we have a major move, we're looking for here. But you can see how this move created that upward move, and then down, and then continue to go up again. So why is this important? Well, if we hit this range here, and we go and we hit this range here, you're looking at, let's just make it easy, let's say 502 to 59, right? That's enough. That's a trade right there that you're crushing it. You know, that's one trade gets you through the entire day, just based on past data. If you go off the long here, off the green, you're getting similar point spreads. You're getting these 50-point runs. If you go off here and hold it, I mean, my God, you're 441, 445, 4 in that area. You know, all the way up. But we do day trading, so we try to get out within a day. But I just want to let you know how these patterns work, how they are essential in determining what we're going to do. So now we have all of this history, and now we're going to go to 15. Now the reason why the 15 is beautiful is the 15 sometimes, not all the time, sometimes will give you a range which you can play areas, like this area here. So there is a double top, right? Top, bang, immediately goes down. Beautiful. Right? So here's your base, here's your up, you break it, come back up again, and you're immediately up here. That's a beautiful trade. You break it high, you go all the way down again. So really you can play a range on a 15, which is really, really nice. But 7 a.m., this is the move you want, this collapse. Right? And if we look on what it's based on, history-wise, it's based on this mark, but it's based on close to a double bottom and the break here on a larger time frame. So we drew that line as support and the break, and we now see that it's become resistance, right? There's the beginning of our day. We go all the way up to the top, resistance. So this is the first move. I would expect you to do nothing. If you just woke up and you're playing, this is the move you wait for. When you see this move, and then you have a wick down and a wick up. So that initial move down is everything. It stops here, right? And then it begins its descension. So let's break this down into smaller time frames. Let's go to the 5. And we can see that's a very fast move. So within 5 minutes, it covers here and covers here. Let's go down to the 1. Well, you see almost the same thing. 1 minute time frame, jets down, bases. So your meat's here. If you ever get a power move like this, don't look to short again. Wait. You have an upper, you have a short here. This is your entry. This range in here is your entry. You can get in here, you can get in here, and believe it or not, you are looking for either this base, or this base. This is the range. Almost a similar range as here. But you're looking, if you hold it, you will probably make this profit. But let's see what happens. So if we go throughout the day, and we're just working off that limited amount of data we have, what happens? Well, we make it all the way to here, which is the top of the meat of the candle. That's the only, based off that one move, that's the only trade you needed to make. And you're 542 to 720. Yeah, alright, so that's not bad. It's 178 points. Your day is complete. You needed to make one trade that day. And a lot of times what I like to see is, I like to see some people will just get in and start trading. And I think it's important. So, you know, they may trade this, they may, wherever they want to trade. This is what you want. You want to let the war happen. And once the war happens, then you engage at the best possible position. You don't just jump in the middle of the war and try to figure out what you're doing. You're a day trader, you're a specialist. You're not holding it for the long haul. You're waiting for one side of the battle to happen, whether it's the red side, right? Or whether it's the green side, right? So if we get this green bar here, it could very well take off here again, but if we notice a pattern, we want to play the pattern. So we are looking for opportunities. So this is the opportunity. Here's the upward momentum. Perfect. And that's based off the 1. If you decide not to play that, which I don't know why you wouldn't, but let's say for some odd reason you missed that gigantic move and you're walking into the fuckery that is this level here. So you can see a base here, but you see a great base here, right? So we see a touch, we see another touch, we see a break. But for the most part, this area is held really, really well. So if you went long off of here, long again, long again, look down, long again, you're not doing too bad. That's another pattern based off of a baseline. Let's analyze the day more. I like to trade the 15-minute and I like the 1-minute for my entries. So let's look at the 15. So on the 15, we get this. We almost have an upward, a downward, right? We have an upward, a downward, upward, a little bit down. Right, so we're almost getting a high here, right? So that's kind of our peak. Once we break these two bars, the meat of this bar and this bar is very similar, very tricky. So if we short off this bar, that's a short. Goes up, short. Now we start breaking into the next level. What you want to look for, and what I love to look for, is I look for certain areas, like that base, and this base here. Here's your next base. You go up, you hit it, resistance, you pull down. You hit it again, you go down. You hit it again, you go down. You get close, you go down. If you're not recognizing this pattern, right, you're absolutely crazy. You should be shorting off of this line like there's no tomorrow. Short. Wait for it. Short again. Hit it. Short again. Hit it. Short again. Get close. Short it. Now once you've taken this, look at this opportunity for a massive move. And it's a retrace that I would honestly look to get out here, but look how history repeats itself. It goes right to the wick. Right to the wick. It's perfect. It's a balance. You have a smile fill here, and then you have a reverse smile here, 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 in perfect balance. There's the stop, there's the stop. Now you could argue it could drop down to here, who knows, but it decided to drop here. That's on a 15. If you want to look at the 5, you'll see a similar pattern, right? Drastic move down, shakeout, drastic move up, base, 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 almost a base there. Then we have a new base here, right? Short, 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 tank. That's a safe exit, but if you're super greedy, you go there. That's a daily analysis. That is everything you need to know based on a day. And that's multiple time frames. You want to trade the 1 minute, you could trade the 1, you could trade the 5, 15. The hourly, I'm not really a fan of trading the hourly, but let's look at it. Bang. Not so much on the hourly. 30-minute gets a little juicy. I'd say the 15 is fun, but just based on our overall analysis from the daily to the 4-hour to the hour, we've established previous history. Not so much in here. I mean, we could go back, but what we're focused on this day, and we're going back a little bit in time to major movements, and that's a big major movement there. So we established on our daily, we established the top of the candles here, right around there. But the meat is there. The meat of that candle is there, right? And then we did our measured move. We got this line. And then as we went down in our different time frames, the 4 hour, the hour, etc., we started calculating that we had a major buy area, right? So our major buy area was based off of this reversal. Bam. And it was pretty tight to here as well. So anytime we hit here, we were looking to go long. And then we have obviously higher ranges in here, which we didn't really get to. But we were looking for major moves like this big candle here and an absolute collapse. So we haven't really filled this area. So here's an example like we had here. We had a retrace, but here's an example where we had a major candle, right? And an absolute trace down to there. But if we go back in time, we can see that it was just simply completing this move, which it did. It took a long time, but if you did your history and you shorted, shake out, down, down, down. Whoops. Sorry about that, I fucked that up. We would know that we have a base here, base here. So just doing your analysis of everything. We can take something that looks like this, right? And we can figure out why it does what it does. And that, my friends, is day trading. You're using the past to predict the future, and you're using the present to predict your next move. And then based on the ongoing times in between, we're creating levels, right? In levels. And we're basing all of our moves on what it's doing. And that is day trading. That's day trading in the Nasdaq. You guys did that with me in 28 minutes. Not bad. Not bad at all.